The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, not the best way to start the week in the market trade is we really just couldn't get things rolling on the day Monday. Plenty of headwinds out there from outside market concerns, geopolitical risks, and more. And really outside of soybean meal and hogs, everything else was under pressure on the day Monday. Let's talk about it. Joining us for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again. And as I was mentioning, really just kind of stuck in neutral, it felt like, to even reverse a little bit in the grain markets and in cattle, too. Ended up with a down day in cattle. I know a lot of headlines over the weekend seemingly gave us the start of the headwinds on Monday and probably continued through much of Monday's session, didn't they, John?
Yeah, very much so. I mean, obviously, the biggest selling pressure stays in that soybean market. And, we saw some confirmed trade that Eastern importers bought some Brazilian beans, about 3 cargoes. What is happening is that harvest is ramping up very, very quickly, 9-11% done, somewhere in that range, depending on what analyst group you believe. But it's about double the 5-year average. It just seems like the demand is kind of falling off. Even the Chinese are kind of out of the soybean market as their soybean meal prices in China are trading at 40-month lows. So I think that's just building a perfect storm. You got beans coming in, no real place for it. The premium that is significant in terms of price compared to U.S. beans. And that's just allowing that type of export trade to occur probably earlier than it usually does. I mean, we've always seen a little bit of movement, but that's always in that April-May window versus now. So that's a little concerning to me. I think the market definitely took that into account today. We already saw the carryout go up a little bit on production at the last report. Now, if we see some increase in the import side, we'll see. 3 cargoes is down a lot, but it's just the sentimental factor of it all. And what the mind thinks is going on here, or at least the market thinks is going on here in terms of those beans, that just spilled over into corn, as well as some of the weather, possibly coming through the Southern Plains weighed on that wheat market. It looks like we've got some good moisture getting forecasted there. Just really put us into a pretty bearish environment as now, soybeans got through the low from the USDA report. Corn got within a couple pennies of that low from the USDA report. Just feels like we got some further ground to slide here unless all of a sudden we get a little bit of change in the news front.
Yeah, and it seems like managed money continuing to grind this market lower, John. I think the notes I saw, if you combined the short position in corn, soybeans, soy products, wheat, we're at near record short, probably some of the lowest we've seen since 2019 in the middle of the trade war, I think was the last stat I saw, something to that effect. So, really, until we get something that changes the news sentiment in this market, it just feels like that managed money, that fund money is going to continue to grind this market lower, John.
Very much so. I mean, they don't have a reason to get out other than just want to, and I don't see that right now. And, as disappointing as it is for the producer side of it and where prices are and prices can go, excuse me, it just feels like we're kind of in that window right now that, there's really nothing to focus on except for demand. The supply we got to work through. We don't have any new crop news. We're not seeing anything to kind of stimulate this market at all here. And so the path of least resistance is still going to continue to be to the downside, at least in this window. And, other than historical values now, realistically, you look at some of the long-term charts, even though things are pretty disappointing here, there's still air underneath both of these charts for both corn, soybeans, and obviously wheat too, that prices could easily fall into another hole or another leg down if they want to. The thing is, we'll just have to see. So it's a concerning market right now. I just don't have a whole lot of things that really kind of grab onto that are optimistic, other than just the trend, and it needs to turn at this time frame. So that makes it difficult for conversations on the phone, difficult for producers with supplies. What do we do? You feel like prices should be higher, but you understand where we are and where we could go. It's just kind of a limbo land right now, talking to people in terms of what you want to do.
lot of news out there that's bearish, a lot of noise out there, I should say, between China's Evergrande group, that news over the weekend, early Monday, some worries about the Chinese economy with that big news. You throw in there the geopolitical tensions in the Middle East and the attacks over the weekend on U.S. forces and things like that. I feel like all of that, coupled with all the economic data we're supposed to get here this week in the U.S., that all just it kind of weighs on the market, and a lot of it is important, but also feels slightly like talking points in a way to where they're not fundamental things in this market, but yet the fundamentals continue to lean bearish as well, John, right?
Very much so. Touching on that Evergrande situation, that really caused a lot of chaos when it was, a handful of months ago when that kind of blew up. And again, it's just a reflection of where maybe the Chinese economy is. Obviously, if the Chinese economy has a cold, the rest of the world kind of has a cold. They're the biggest buyer of commodities, as we all know. And if they're kind of not in the market because the economics are not there, the money is not there, that's going to have rippling effects throughout. I do think that is also part of what's going on here as well. It's just over concern regarding that. You talked about the pop in crude oil due to the Middle East tensions. Well, we gave that back in a nice little hook reversal to the downside today. Again, probably more weighing on those demand concerns. And it's a concerning market right now. Again, just trying to find something positive to say, all right, this is a reason we can turn. It's just not coming at us other than just the length of the position on the short side and the calendar of the year. And realistically, the calendar of the year doesn't exactly dictate that right now. So, now as we get through the next few weeks, and we'll start thinking about spring, we'll start thinking about acres, and even that turned a little bit more negative over the weekend as chatter that we're going to see, with the bean prices softening the way they are, that we could see a bigger corn acre pile. Well, that's the last thing we need is carry out pushing 3 billion bushels next fall. That'll make 450 on the board look pretty doggone good, probably given the historical price windows and going forward. So, for right now, for producers, stay active in terms of getting a handle on those bushels that don't have a price on them. Puts aren't that expensive for short-term time to ride this thing out, protect yourself a little bit here. Or if you make the sales, target some calls, but it's kind of hard to do when the market keeps sliding. But somewhere in here, this market will have some value. Not that we're going to turn around and run 70 cents higher, but maybe enough we get some money flow that can cause some movement in the marketplace again.
John, talk to me about the livestock trade. Cattle started higher, then broke on the day on Monday. I know we got that big biannual cattle inventory report coming up Wednesday after the close. I mean, was this a good old-fashioned case of squared up positions, or did I miss something in this cattle trade, John?
That's what it feels like the most to me. I was liking the way the cattle market was moving. A couple days up, couple days down, series of higher lows, higher highs. We did that from December all the way up until about Wednesday last week. And then all of a sudden, I don't know if the retail buyer came in or somebody came in and boom, we popped this thing up quickly, kind of breaking the trend a little bit. So it just felt like today, after we had a fairly good start, people pulled the trigger on some profit taking, saw some money move to the sidelines. Like I said, cattle inventory report coming on Wednesday. That one could be very, very interesting. Maybe we've priced in a lot of the positive news that's coming. To me, I'm still looking at calf crop, cow breeding herd numbers, things of that nature. What are we seeing on the expansion front, which I don't think is still there with the heifer numbers in the feedlots still where they are. So this market just might be taking a little at risk off here as we get close to that report. And as we look to the third and fourth quarter, I think that's where we could still see some really big tightness in terms of cattle numbers, and some weakness here might actually just turn into an opportunity to rebuild some longer positions long term. So, but again, I think it got out a little over its skis last week with the strength and the follow through this morning, and it just the money wanted to square this thing up here over the next day or so, especially going into that report.
Hogs found a little bit of buying on Monday, but largely feel like they're kind of tiptoeing around here. Maybe even wait to see what happens in that cattle market here midweek with that big report as well, John. What do you think?
Yeah, as cattle kind of rolled over, hogs started to get a little bit, felt a little bit like some spread trading there too that maybe came into play. I'm a little watching that April contract, $83, trading well above the index at 69, 70 basic, 69.90. So they're starting to look a little rich to me. Today was a consolidation day. We basically traded within Friday's range, just wound up being a little bit on the upside. So again, we'll have to watch the next few days here. I've been talking at least about looking at some of those summer puts and getting some floor underneath that $96 summer market, in this window. Still don't like the supply picture, going forward here for the hog side of it. So that makes me a little cautious that, maybe we're getting a little overvalued here, and it might be time to make sure we start building some floors. And he mentioned that in the cattle market too. 180 April puts are not that expensive. Good way to protect yourself here. We talked about safety valve puts all during the last rally. That's a window here. We typically see some cash peak around the middle of February. We get some walk back before we get the next kind of summer run. That might be a great spot to put some protection in here and protect yourself going into that report with some fairly reasonable puts in terms of price.
John, it feels like regardless, grains or livestock here, we've been talking about this, the overall theme in this window, minimizing and managing your risk right now. I think that's what it's all about, right, John?
Very much so. Maybe more the minimized side of it, because again, even though things are oversold a little bit in the grain, or a lot in the grain side, there's still other potential downside there. So what can we do to limit the losses that we've already exposed ourselves to here with the price move? And again, it's still about risk management and just understanding where your risks are. Look at the market situation. Is your risk to the upside, to the downside? So where do we can put our protection in? What are we willing to spend on that protection? I say it all the time in some of my presentations. Sometimes the cost of doing nothing is a lot worse than the cost of doing something to protect yourself.
John, how about that dairy market too, real quick? I meant to ask you about that. Any notes over in dairy as we start off the week?
Well, it sure feels like maybe we're trying to get ourselves a little bit of a bottom again, starting that last week, and now we got 3 strong up days in a row. Bullish reversal on Thursday last week. Good pop in cheese prices today, 70 or 7 cents higher, 8 cents higher, barrels and box and barrels respectively. So maybe it's a little bit of a bottoming point here now. I'm going to be very, very cautious. I've said that. So if you look at the timing and the charts, anytime we get these runs, they turn into very quick sell points. So as a producer, take advantage of this to some extent. Make sure you're reestablishing some floor, things of that nature, especially out into those summer months. We're back above $18 for June milk today. But we're at least in a window here. Milk production report came out last week. Milk production was softer. Cow numbers continue to soften. Global milk production is looking on the softer tone because of some of the price issues. So maybe this is a spot this market's done enough. But again, be cautious. Again, here we are looking at a very quick rally, picked up over $1 in 3 sessions. Typically, those types of moves in a downtrending market get met with quick selling pressure. So we'll have to kind of watch that going forward.
John, anything final from you want to mention or reiterate to folks today?
Again, just in terms of grains, get control of those unpriced bushels here. I'd rather be wrong with some cheap puts over the next 30 to 50 days versus just letting things go. If we do make that next leg down, the charts do point lower. Not sure if this is the window that it happens in or not. Then we'll see where the production numbers come in for next year. So again, find where the value is that's out there for you to some extent. Make sure you protect it. Don't forget about 24. We're still sitting at 470 out there. That could be actually a pretty good number if we do get a big acre number. Start just thinking about the longer term and minimizing the risks that you have to the downside.
John, if folks want to reach out to you and ask questions there at Total Farm Marketing, how can they reach you?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. Again, don't forget that website of ours, totalfarmmarketing.com.
With that, John Heimberg, Total Farm Marketing. Always good to talk with you, John. Have a great week. We'll talk to you again next week.
Sounds good. Have a great week.
Find us online at markettalkag.com. That's going to do it for Market Talk today. I'm Jesse Allen. Have a great afternoon.
If you miss an episode of Market Talk, you can listen back to the show anytime. Just search for Market Talk on your podcast platform of choice, and you can hear past episodes of the program on demand.